The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the January 5th. Magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. Who knows, we should always be pioneers of our future versus prisoners of our past. Hope everyone out there had just simply a fantastic weekend, a fabulous holiday couple of weeks out there, that you're all rested, ready to get back into things. Let's make sure that you and I, that we do everything in our power to have the best year ever. Let's make this the best 2015. And, of course, as we begin our day, let's always remember that life happens for us, not to us. And when you and I, we make that one little shift, when we change that word 2 to 4, a 2x4, it kind of like, it's a 2x4, hits you upside of the head. You all of a sudden realize that you can find the gift in every set of circumstance. Maybe you can't find it right away, but if you spend just a little bit of time, you'll find that you can out there. And that just, folks, that just simply means that life is a good thing. As long as we're above, as long as you're not throwing dirt in our face, then we've got a chance. Hey, look. There's one thing that is for sure, and that is that I am grateful. I am grateful for your presence here today. I am here to serve you. That means go ahead, pick up that phone, give me a call at 877-927-6648. Internationally, you can reach out to us at 727-445-1044. Together, you and I, we can go hunting for bulls and bears. This is Magical Monday. Of course, this is Tiger Financial News Network. Welcome to the Hotel California. I'm Steve Rhodes, and of course, welcome to the show. Right now, we got Dow Futures off 77 points. Hey, if we were in Las Vegas, we'd be rolling sevens right now. It's trading out at 17,645. We got S&P futures down 10 points, trading out at 2,036 and a quarter. Russell 2,000 off about 7 points. NASDAQ down 15, trading out at 41.99. The king of beers, the king of dólares, up 467 ticks, trading out at 91.85. We got trouble in River City. You got the British pound down. You got the euro down. We've got Goldilocks up $9. Something to think about. Silver up 26 cents. That's up about 1 7/10%. She's trading out at 16.03. Light sweet crude out at that 50.91 level. Been down as low as $50.55. Hey, if we were playing craps, we could go for the hard 10 and play double nickels out there. Natural gas on the move this morning, up 10 cents, up 3.5%. Let's take a quick peek across the globe, see what we have out here. Hey, do you think the market's going to go lower, or is it about ready to form a little bottom out here? Oh, Stevie says bottom. Maybe a little bottom fishing out here. If we take a look at the markets overseas, though, we got the DAX off 145 points. That's down 1.5%. FTSE off 1%, down 64 points in Asia last night. A little bit of a mixed bag. The Nikkei, down 0.25%. That's off 42 points. The Hang Seng off 136 points. That's off a little over 0.5%. The Shanghai up 121 points, up 3.5% out there. Make sure that Shanghai was actually trading last night out here. There we go. Yeah, January 5th. It most certainly was. That was on the move top side. Of course, that's the weekly chart. So where do we want to begin our day out here? Where do we want to begin our day? Let's begin our day this way. Let's go see what we've got going on. Let's go take a look at the 2-hour charts out here. And we'll look at these 2-hour charts for the Dow, for the NASDAQ, for the ES-Mini. Let's start off by taking a look at the NASDAQ. What do we know here about the NASDAQ right now? No, number one, we got an A to B equals CD to the downside out here. Let's go take a look at that pattern. Our A point, we'll start at this little swing point high out here at about coming into the close. That was back on December 26th out here. If we come down to our B point, that was coming into the close, and that looks like that was on December 30th. Little retracement up here into about the 12 noon time. Looks like that was on December 30th. 31st, we can see we're down just below the 1 to 2 A to B equals CD to the downside. So we can see that's the pattern that has been in place. We can see that price has been moving lower with less relative weakness. Take a look at that little divergence out here. We can also see that we saw a little spike lower. This is a 2-hour chart. Now, this 2-hour chart means that the session here, the candle that we're in, doesn't complete until 10 o'clock. So we got a lot of time. We got another, 49 minutes between now and 10 a.m. At this stage, let's go with the information that we've got out here. Yeah, price is moving lower out here, but we have gotten to the seventh wave, potential seventh wave to the downside out here. It's either number 7 or if we roll the dice out here, let's roll the dice. Either 7, come on. There you go. Grab that little tool out there. It's either 7 or the third wave to the downside. I'm going with 7 as we speak right now. Now, the problem here, it's a 2-hour chart, and it says that we really don't get confirmation until 12 noon today. So we'll look at some intraday charts here during the 9 to 11 o'clock Trader's Edge shows out here. But at this stage, this could be setting up for a nice little bounce out here. Could be more than just nice little bounce. Can price continue to go lower? Yeah. We're still in that 7th inning stretch, and we don't get any confirmation of that pattern, as I said, at a minimum until 12 noon out here. But I do like what it is that I see in the markets as we speak right now. Does that mean go take a long shot? No. Does that mean to close out a short if you're short? No. It just means make sure that you've got stops in place, know what to be looking for on the on either side of the trade. That's really what we need to do. You and I, each day, each chart, we need to take a look at the bullish and the bearish case out here. Now, if price is going to continue lower, and we go back to the NASDAQ out here, let's come take a look at the daily chart. What we're likely to see is price move down to the 4,092 level. 4,092 is nothing more than the retracement from the low off of the October 16th low to the high that was put in here inside the NASDAQ, the November 28th level. That 4,092 area, that has held as support. Last time that we were down there was back in the trading session of December the 16th. So real key for us today, if we take a look at the top of that trading session from December 16th, the high out there was 41.8975. What did we hit here this morning? We've gotten down to 41.9525. So punch down into it. That seems pretty logical, pretty likely here as we come into the open, maybe between the 930, 945 level, if in fact we see price close inside that swing point from December 16th. That then says, more likely than not, volume or not, volume, schmolume. Of course, we'll start to see volume come back into the markets here this week, maybe even today. If we do see a close inside 41.8975, pretty good chance that we're going to see that 40.92-ish level, maybe a low, the test of the December 15th low at 41.41 take place. So that's what's going inside of the NASDAQ. If we go take a look at the Dow, let's go look at the Dow. We're going to see basically similar. Excuse me. We're going to see similar patterns. Not completely the same pattern, but we're going to see similar patterns out here. Now, inside the Dow, what I don't like about that's a 300-minute chart. Why did I grab the wrong chart out there? Just simply let me come back and let me grab the right. We're going to try to stay out here with the 2-hour time frame. So as we take a look at the 2-hour chart for the Dow, we can see that off of its high out here, that high, let me get my cursor out here, that high coming in at about 12 noon during the 12 noon session on December the 26th. We can see we're in potentially that 7th wave to the downside. We can also see that the price was moving lower with less relative weakness. We have not closed below that low. By the way, it closed below that low. In essence, almost negating that pattern would be a close below 17,655. So you're in your 7th wave to the downside out here. So, come the 10 a.m., 12 noon session, it might provide a fairly decent reward to risk trade out here. If, in fact, price continues lower inside of the Dow futures, let's go take a look at what the daily chart looks like here. Inside of the Dow futures, that would take us into a price projection of about, let me do this. I've got to erase a few patterns. So let's go ahead and let's decorate the chart out here. Let's get rid of this because I don't know what that's doing here. Come on. Delete. There you go. All right, we got our delete button going. Well, let's expand this up, make it a little bit easier for you to watch, even though you're watching on full HD here at TFNN. That is a beautiful thing. If we come from the swing point low, the most recent swing point low is what I'm going to do right now, December 16th. We used we looked at a little bit longer term time frame when we were looking at the NASDAQ. In this case here, I'm going to change change things up just a tad, because what we can see at this stage of the game, from the swing point low of December 16th to the high that was put in here December 26th, what the Dow futures have done, they've made a 0.382 retracement. 17,639 is the number so far. What we've seen today is 17,630. So if this area holds, if the 120-minute chart, which is signaling to us that it wants to form some type of a bottom here, let me tell you, folks, if the highs of 18,051 get taken out, that sets up another huge A to B equals CD to the upside that could be taking place inside of the Dow out here. Let's do the same thing. Let me see. We're at the 0.382 retracement using the same set of swing points in essence for the NASDAQ. Let's see where we're at. Let's come from that low out here on December 16th to the high. No, we're just below that level here. So what this actually says to you, what it communicates to you, what it communicates to let's go ahead and get rid of this one out here just to make it easier for you to read, is that the Dow futures are actually stronger than the NASDAQ at this point. The NASDAQ says, hey, you're in between floors here. That means between the 0.382 and the 0.618 level, so 4173 could, in fact, be its next target area. But I'm going to go with the longer term until we see what happens at this level here of 4189 inside of the NASDAQ. We really won't know. Now, let's switch over. Let's take a look at the 2-hour chart in the S&P futures. What we're going to see here is the exact same pattern. We're going to see this A to B equals CD to the downside. We're going to see that the ES mini spiked down into the 2034-ish area. It actually got down to a low here this morning so far, but 2034.75. Yeah, I'd say it got in the 2034 area. It's got the A to B equals CD to the downside. It's in that the seventh wave to the downside. The seventh inning stretch is what we've got going on inside of the marketplace. Of course, we won't have the confirmation of that, as I say, until 12 noon out here, but things are setting up. Let's go take a look at the daily charts. Let's go take a look at what does failure mean? What does success mean out here inside of the ES Mini on its daily chart? I've got the weekly. Let's change this to the daily chart. Hocus pocus, dominocus. Let's go take a look at the retracement from the low out here on December 16th to that little, looks like doji high. Was the doji high, let's see, 2,088 on the 29th, or was it, it's 2,088.75. That is the number. We'll see the price right now just trading right at the 0.382 retracement, 2,040 to be exact, your 2,000. Futures, let's go check out what's going on inside the currency futures out here. In fact, let's go take a look at that euro. We'll look at it on several different time frames out here. Getting thrashed, getting trashed is what it's doing. It's trading out at the $1.19-ish level out here. Here is a weekly chart. If we pull this back, we take a look at the weekly chart for the euro, we're going to see it's trading below, I say, out here, trading below a key level of support. Will old support become new resistance? And that's the weekly key reversal bullish engulfing session from July, a week that began July 23rd, 2012. This is Steve Rhodes. This is TFNN. We'll be right back. We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As Seen on Bluebird terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 63 right now. S&P down about 8 points out there. Hope I didn't blow your mind by saying, hey, it looks like the market's getting ready to form a little bottom out here. But let's go back and let's go take a look at the euro. We're looking at the weekly chart here for the euro. A little bit of implosion potentially going on inside of the euro. What we know about the euro is that it has broken through. It did this on Oops, didn't mean to put that line in there. Broke through a key level of support on Friday. And with that, come on, what's the deal out here? Here we go. Broke through that key level of support. This candle right here, this little candle session, this is the week here that began July 23rd, 2012. It was a key reversal session. It was a bullish engulfing. We saw price close through there just slightly below that on Friday. That was a signal to be careful. But during the holiday time period, sometimes some of these signals here are maybe some false signals. So you got to be careful, especially when you get the holidays falling the way that they did here this week and people taking time off. But I would have to say, coming back to work last night, the holidays basically over. We saw the little bit of a move lower, gap down inside of the euro, and this actually sets up a large A to B equals CD to the downside. A real significant A to B equals CD to the downside, taking us into the 110 area out here. Now, what's the time frame for that? I don't know what the time frame is. I do know that until we see any kind of bullish reversal signal, you're looking at a price projection of about $1.11. Of course, this is the futures contract that we're looking at. So this has got us set at 1.11. If we take a look at the actual currency pair out here, do we have a little different figure? Give me a moment here to switch back. I'm looking at the futures contract just simply because I don't have a delay on it, so that makes the things a little bit easier for you. Come on. Here's our U.S. dollar. And we know also, if you're watching us on Tiger TV, you can see these yellow arrows on my screen here. Yellow arrows. You see one red arrow as I pull this back. These are, the euro has an amazing pattern out here. You know, what you and I are pattern recognition experts. And the reality is that these markets form patterns that repeat time and time again. Why is that? Because these markets are nothing more than the set of human emotions of buyers and sellers, of human beings, or human doings, whichever one it is that you are out there. And what happens is that these markets form these patterns. It's really up to you and I to go identify these patterns out here. These patterns here say that we're going to see some type of we typically, in the past, we've seen a significant market bottom or market top for a period of time inside of the euro in January. That being said, you know, weekly wise, now I don't think that the euro is going to drop like a dead balloon, although anything can happen here. Again, the price point here, I'm taking a look at the euro US dollar. That gives us an actual price projection of 1.1096 out here. And that's really where it looks like, at a minimum, the euro is headed to. But the question is, how long is it going to take to get down there? If we were to do that between now and the next couple of weeks out there, that would be one heck of a wide-ranging bar to the downside. So I can't really, it's not that it can't happen, it's not something that I can totally anticipate. But if we go back to the daily chart out here, the daily chart has some other A to B equals CD patterns that it has formed or is forming out here. And that's this shorter one, this smaller one. That's coming off this swing point out here. That looks like October 15th is your A point, your B point down here around November the 7th, and your C point right out here on November 19th. So you can see it's done a 1 to 1.272 A to B equals CD. So a weekly chart going to look a little bit different than a daily chart. On the weekly chart, until the euro gets back above that B point, you have to assume that the A to B equals CD to the downside is the pattern that is being formed out here. But there's the opportunity. There's the opportunity for today, as a matter of fact, as this level here is hit, for the euro to actually go ahead and form a hammer candle. That could certainly do that by closing, just maybe around the 1.1959-ish area would actually set up a hammer, or could even close up at the price point of maybe about 120, 1.203, somewhere right around there. But that's what's going on with euro at this stage here. The information that is provided to us is that it wants lower price. And if it wants lower price, that's going to continue to put some zoom inside of the U.S. dollar index. It's just that simple. You've got 59% or so of the weighting structure of the U.S. dollar index being the euro out here. Hey, if we go take a look at the Great British Pound, let's go do that. Let's go see what it is doing. This is traded much lower. Well, no, not too much lower. So it's back to getting back towards its lows here. This is the daily chart, very short-term chart out here that we're looking at a 1 to 2 A to B equals CD that it is trading at. But if we look at the longer-term chart for this currency pair, let's go take a look at that. Give me a moment. Let's go take a look at that. This says that what the Great British Pound is likely to do is head down to about the $1.50 level, 1.507. Now, if it does that, if this is moving lower, this is going to get weaker. That says the U.S. dollar index is getting stronger out there. All that. Gold's holding up pretty well. Silver's holding up pretty well. But how much can it really handle that fight of a stronger U.S. dollar? I don't know the answer, but we'll go find out. This is Steve Rhodes, TFNN. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 93 points. Trade out at 17,738. S&P down 12 at 2,045. Composite off 27 points. Trade out at 4,700. Even Steven, so to speak. Russell 2,000 down $8.70. She's trading at 11.90. The DAX off 142. The FTSE down 60 points. Gold up $12 right now. Silver up 39 cents. Light sweet crude off $1.76. Trade out at 50.93. Let's go check in on Texas tea, black gold. Let's get a feel. Remember, we had a price objective of about $50 and a change as its longer term 0.786 retracement level. Let's go take a look at that, see where she is trading at. Let's put this on the time frame. There we go, $50.67. Your trade at $50.87 right now. The low so far today has been $50.55 out there. If we see a close below 50.67 with any kind of significance, any kind of wide-ranging bar, then that says light sweet crude's back to the 37 bucks or something? 33.20. 33.20 would be the number out here. So what we know about light sweet crude, this is the general area where it should find some support and then get some kind of a bounce. How much of a bounce? I don't know. $3, $4, $5, $6, $7, $8, $9, $10 a barrel. Hey, $10 a barrel would be a 20% bounce inside of light sweet crude. Remember, you're trading at $50 right now, so 10% bounce, $5 would not be too shabby out here. But we don't now. That's the weekly chart that we're looking at, just so that we can take a look at the retracement levels. Now let's go put this on the daily time frame. Now this is a continuous contract that we're looking at. Let's go take a look at the bars out here. You're going to have have to see some kind of bullish reversal signal, which we have not seen for quite some time out here. So, but we do know that light sweet crude is back against the 0.786 retracement level, and that does have some meaning out there. So we'll continue to follow that. Now let's go and check in on the other commodities out here. Let's go check in on Goldilocks. If we check in on gold, she's up $13, trading at $11.99 as we speak right now. In this case here, we are taking a look at the current contract, and let's pull this over. And what do we know about this? Is the weekly chart. Okay, so it's the weekly chart here for gold. I want to put this on the daily time frame, though. So as we take a look at the daily chart right now, you've got even with the U.S. dollar index being up so nicely, you've got gold trading above the trend line, short-term trend line out here. The key is going to be that longer-term trend line. That's the white one that is on my screen as we speak right now. If we take a look at gold, it's really just been trading sideways out here. One can say, hey, not the action's not too action-jackson, not too bad. Now I should have a chart out here. Let's go take a look at the chart. There's my light sweet crude chart. But let's go take a look at. There are people that believe that the markets have to go lower if light sweet crude goes lower. And I just say, get that 2x4 out and hit yourself upside the head, because that's not the case. Don't believe everything that you see out there. Go do the work yourself. Now I want to go take a look at. I should have a chart here. I'm just going to look for it very carefully, because I got a load of charts out here on the screen, probably more than I need to. Should have just broken this down into a couple of tabs. I wanted to take a look at Goldilocks and the U.S. dollar. I think that's this chart right here. Is it not? Yeah, there's the U.S. dollar index. Now, this is inverted here. That way, a stronger U.S. dollar index, okay, is headed south, and therefore it should correlate well to what's going on inside of gold out here. Now, what we can see, or certainly what I can see out here, is that there are plenty of times where this chart becomes uncorrelated. Here is an example. You had the U.S. dollar index. Remember now, when it's rising here, this says that it's actually getting weaker. So here you've got the U.S. dollar index moving lower, in essence, even though it's moving higher on my screen, and you had gold moving in the opposite direction out here. And this is a weekly chart that we're looking at on my screen. So what I say is take those correlations and throw them out the door, because they don't always work, and instead just go ahead and play the charts and the chart patterns out there. That frees you up then to go back and take a look at gold and say, don't let the U.S. dollar index totally cloud your judgment on what you should do. Instead, stay focused on what the charts are telling us, what the chart patterns are telling us. I think if you do that, you'll make a better and a more informed decision out there. And at this stage of the game right now, we know about gold is that it's really just been traveling sideways for the most part ever since probably the middle of December. And breaking trend lines by moving sideways is about it means nothing, in my opinion. Trend lines, you want to see trend lines broken like it was broken out here on the trading session of December the 9th. That was broken. That was a trend line broken with conviction out there. Of course, price got up to the top of that white trend line out there, and that found itself in resistance back down into the older trend line out here. So at this stage of the game, I'm basically ready to just simply say, you know what, ixnay to that red trend line. We're getting rid of it. It's toast. It is a French toast out there. Not that there's anything wrong with French toast, but it's now toast. We're no longer going to pay attention to it, because that trend line, it just simply has not been broken with any kind of conviction. Now, in order for gold to prove itself to you and I, it's going to have to break this other trend line that is out here. And what you and I are going to do is we're not going to get too hung up in the fact that the U.S. dollar index is moving one way and gold is doing something else out here. Instead, we're just going to focus in on this chart out here. Now, that's what's going on in light sweet crude. That's what's going on in gold. Let's go take a look at silver. A little bit different message out here in high-ho silver. She's up 42 pennies, but let's do the same thing out here. Let's go take a look at its trend line. Now, in the case of silver, this looks to me more bullish than bearish from the standpoint that longer-term trend line, which is the red line going across my screen, was broken with conviction. That was on that same trading session. I believe it was December the 9th out here. Price came back, tested it. It has rejected that area. It continues to trade above this level, above that trend line. Now, it's also just moving sideways. So can you get really excited about what silver is doing? No, because it's traded sideways in kind of like a tight range since December 16th, since that session. So it's not really providing us with a ton of information as well. I think it's going to be all up to Goldilocks and what it wants to do. So that's the case of light sweet. That's our case of light sweet crude, of gold, of silver. Let's come back. Let's take a look at these 2-hour charts here inside of the ES Mini. Let's go take a look at that as we speak. So still in that seventh leg to the downside and garnering up some speed here. I still believe that there's a good opportunity that what the market's actually doing is going to be forming a decent short-term bottom out here. So that is still the play. That is still something for us to be focused on and looking at. Remember, this trading session here does not end for another 19 minutes out here. So as we come to the open of the second hour, we'll make sure that we come back and we take a look at that. In the meantime, let's go. We've looked at currencies. We looked at the index futures to get a feel for what's going on. We've looked at the commodities. Let's go take a look at some stocks that are moving and grooving in the marketplace. You got Zimmer Holdings, MH is the ticker symbol, up about 3% as we speak. That's up $3.20. I don't see any news inside the equity. But let's go see what it's doing. It's taking on its swing point highs out here. Swing point high looks like, well, you've got one in essence formed on December 5th, 1 million shares. You've done 165,000 with only 12 minutes. Not too shabby. You've got one out here December 23rd with 1.2 million shares. So Zimmer Holdings looks like it wants to try to catapult its highs, even in the face of a market that is moving lower out here. Of course, Zimmer Holdings had one heck of a nice sign of strength out here back on April 24th, 2014. This had volume of 12 million shares to the upside. So it looks like Zimmer Holdings getting ready to try to, if the market turns to the north out here, Zimmer Holdings should continue its move higher. You've got Conatus Pharmaceuticals. I had probably totally butchered that name out here, but the ticker symbol is CNAT. I didn't butcher the ticker symbol. She's up 30% this morning. Whoa, what did they do? Report top-line results for their ACLF and organ impairment. Boy, this thing is really taken off. Now, how about that? So you got a high-volume high out here. This ticker symbol, again, CNAT, about 9 million shares, just shy of that, on January 10th to the upside. The high of which is 1567. You're at 11. Well, you've traded up to the $11 range. You're trading a little bit off those highs. It's got some volume in it. Looks like it wants to move up and test that area out here again in its future, 1567. CNAT is the ticker symbol. Also moving to the upside, we've got Kite Pharmaceuticals, KITE. That's up 4%. What do we got? Kite to eligible for $525 million regulatory and sales milestone. Kite received $60 million upfront payment from Amgen. Okay, well, let's go see what Kite Pharmaceuticals is doing. So this is a daily chart. Looks like we've got a IPO back on June 20th. Traded as from the $25, $27 to $30-ish level out here. Trading, it's made a double. It's made a double. It's trading at $63.10 as we speak. Not a ton of information on this chart to give us a great deal to work with, but we can say there was a B point on November 7th that was crossed with volume to the upside. So if we take a look at the A to B equals CD pattern, that this could be forming, not come all the way back down to the low on August the 4th, I should say. That's our A point. Our B point's going to be out here on November 7th, and the C point down here on November 14th. It's just right now today, it's hit the 1-to-1 level. 64.94 is the exact number. It's gotten up to 64.99, but it does look like to me that this is going to want to make it and take it to the next level. That's going to be about $72.33 out there. That is ticker symbol KITE. Let's take a look at some things that are moving to the downside out here. We got Netflix and Tesla. Netflix off about $7 as we speak. If we go take a look at Netflix, we'll see what it is doing. This is a daily chart on my screen out here. We know Netflix has got some troubles some troubles because of that huge gap down on October 16th, 13 million shares to the downside out here. At this stage, it made a bottom back on December 16th. 2.4 million shares came off that bottom with 2.8 million shares. We haven't really seen much in the way of a sign of strength out here for Netflix. But what is Netflix going to do from this point forward? Let's take a look at a little bit longer-term chart out here. Let's take a look at the weekly chart for Netflix, see what we've got. And then the weekly chart for Netflix looks like we got a little bit of a hammer candle. Looks like we've got several bullish reversal signals out here. So what we can say about Netflix is trying to form a low, trying to form a bottom, really. That bottom being the week that began December 15th. Its low out there is 315.54. Now, we know that in the case of Netflix, we had wide-ranging bar, accelerating volume to the downside the week that began October 13th. 38 million shares to the downside. Nonetheless, that level has been tested with much lighter volume. Tested with 9 million shares the week that began December 8th, light volume, and rejected. Tested the week began December 15th, tested and rejected. Formed a hammer candle, formed a doji candle last 2 weeks ago. Last week forms a bullish engulfing candle. Netflix is really trying to establish a low in here at the, now what you'd have to say that low that you'd be paying attention to is 315.54. NFLX is the ticker symbol. Let's go take a look at Tesla, see what Tesla is doing, TSLA. She's trading down about 3%, down $7 and change as we speak right now. Tesla is moving back into its low, this little gap out here into this window. Maybe it's going to move down in there. Let's go take a look at volume. So you got support level number 1 right at 211.80 or so. You got support level number 2, 206.65. The volume so far today, 787,000 shares. That's going against 7.4 million shares. So the volume is pretty decent, pretty heavy out here. Any move below 211.80 probably brings a 206.65. Any close inside 206.65 will go ahead and bring that low into play, and that's out at 192.65. That is on Tesla, TSLA. Let's take a look at Ralph Lauren out here. That's down $4.50, up 2.5%. No news or anything on Ralph Lauren. It gaps down this morning. Let's go see what this thing is trying to do out here. Now, in the case of Ralph Lauren, it's trading into the swing point, the most recent swing point, which was December the 17th. December 17th, that swing got 800,000 shares. You're already down in that swing point today with 232. That says that the low of that swing ought to be tested. That would be 175.20 out here. You break that, and that opens up the floodgates out here for, well, I'd have to say at least it brings in the one. If it gets through that, there are no other floors that were established here in Ralph Lauren. Let's take a look at normal retracement levels coming off of the low to the most recent high, and that would say if it breaks that area, meaning the 175.20, that could bring 166.40 into play. RL is the ticker symbol there. All right, so let's go see. What else do we have going on inside the markets? You got the Dow's off 150. The S&P is down 18. Let's go check in. Let me see here. What do we got? Net declining issues inside the NYSE. So you got decliners outpacing advancers by about 3+ to 1, a little over 3 to 1, 3.4 to 1 or so out here. If we go take a look at the summation indexes for each of the three that we follow out here, you've got all of them in bearish or seller control territory. That includes the New York Stock Exchange. That was not the case as of Friday's close. We'll see how today ends, whether or not those bulls can come rushing in to go ahead and stave off the and create this little low out here that it looks to me like is forming in the marketplace. Right now, inside the New York Stock Exchange, just coming back into its gap. That gap from December 18th, the low is 10,692. So far, the low today, 10,695. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 164, S&P down 21 points, the composite off 38, Russell 2000 down 9, and we're seeing a stretch of this rubber band out here. Now, it's not a good thing that we've got the euro, Japanese yen that is cratering somewhat, so we've got a little wide-ranging bar as we speak here this morning, and prices below the 0.382 retracement level. Of course, this is the liquidity gauge for the markets. Nothing tracks these markets better than this currency pair out out here. So with this travel in the way that it is, says, hey, it could move down to the 140.12 level inside of the markets. But the markets look like to me that even though I'll give you all kinds of bearish signs out here, it actually looks more like it's trying to form a bit of a bottom than it is the big sell-off that I do expect that we will see. But I'm just not buying into it here just yet. But we'll see. I'll wait to see how the market trades by the end of the day. Now, if we go take a look at the Qs to start with right now, we'll go look at the Qs and the diamonds, then we'll do that certainly during the next show. What we know about the Qs right now is we see that price has moved back into the gap. So it's closed the gap. That's the gap from December 18th. That had 49 million shares to the upside. We've been trading for 25 million. We've done about 5 million shares. So you've got pretty good volume here as we speak today. That gap is at 102.09. You are trading at 102.07 as we speak right now. Any close inside 102.09, that brings into play the test of the 99, 92-ish level. That's inside the QQQ ETF. Let's go take a look at Apple. She's trading off $1.67. As we speak right now, Apple here is trading inside of the swing point, its most recent swing point from December 16th, 60 million shares to the downside. It's got 8 million shares in it as we speak right now. It looks like that low will be tested. That will go ahead and put some pressure inside of the Qs, that low being 106.26. Again, you're trading out at 107.74 as we speak right now. Let's take a look at let's go look at ExxonMobil. The energy sector right now, that is off a couple of bucks. Let's go take a look at ExxonMobil, see what she is doing out here. So ExxonMobil actually has now broken through its 0.382 retracement level. That's off of the low out here from the trading session of December 16th to the high that was put in on December 22nd. That 0.382 retracement is 91.75. Now, ExxonMobil had a nice breakout, nice volume breakout, I should say, back on December 19th, 38 million shares. ExxonMobil is pulling back right now with light volume. Yes, light volume. We've done 2 million shares in a half hour of trading. 4 times 6, even if it were to keep up this pace, which it can't, which it won't, you'd be looking at about a 24 million share a day going into 38 million shares out here. So it's kind of interesting with light sweet crude back at the 0.786 retracement level, with ExxonMobil pulling back with light volume as we speak out here, has to make you say, something to think about. If we take a look at a couple of gold stocks out here real quickly, let's go take a look at Rand Gold. GOLD is the ticker symbol. That is up by 12 cents as we speak right now. Here's the daily chart. Rand Gold needs to really clear 69.90. That is the resistance of its downdraft that took place on November the 28th. So really been just trading sideways. Now the sideways movement, the low $61, the high 69. So, it's a fairly large trading range, $7, $8 trading range out there. But 69.90 is going to be the key level. You close above 69.90, and that gets pretty bullish for Rand Gold. Folks, it is Marvelous Monday. Thanks so much for joining us here at TFNN. If you're off to start your day, have a magical day. Stay tuned because Hour 2 of the Trader's Edge is up next. I look forward to seeing you very soon. Take care, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You're watching Tiger TV.